It's important to be informed. This is Experts on Call.
Thank you for educating so many of us.
An advertising feature on AM800 CKLW, the information station.
I wanted to ask a question because I'm a bit confused.
Good afternoon and welcome to Experts on Call. My name is Kyle Horn. In this hour, we are talking about finances and specifically about retirement and preparing for retirement. Alynn Godfroy is with me. Now, she is known as the financial architect for Canadians. She is a best-selling author, and she recently released a book called Retire on Purpose, a financial blueprint to protect your family and preserve your wealth. Now, she's going to be at the Riverside Library on April 17th and at the Budimir Library on April 20th for a free session on planning for retirement. To get a hold of her, godfroyfinancialgroup.com is the way to go online. 519-258-1995 over the phone lines. Again, 519-258-1995. Alynn, it is a pleasure to talk to you. How are you today?
I'm great. Thanks for having me.
I appreciate you coming on here. I think it's the first time I've talked with a best-selling author, no matter what show it's been on. So very cool. Just talk a little bit about yourself, first of all. How did you get your start, and where did you find the passion for financing, especially with helping out people in their retirement?
So I majored in finance and accounting. I'm a graduate from the University of Windsor business program. And I met the gentleman that helped me do my first mortgage. I bought some life insurance. I did investments. And when I went in for a review, and this was when I was finishing university, I thought it seemed like he had a cool job. So I first started working at Clerica, which is now Sun Life, and was there for about 3 years. And then I branched out on my own, and now I work as a broker. And I'm contracted with about 20 companies across Canada to be able to pick the best companies to deal with for my clients' insurance and investment needs. How I originally started, I had a client say to me, you know, I think I wouldn't have used the company name, but she said, I don't think that they got me all the deductions. And sure enough, I redid this lady's taxes, and she got an extra $1,000 back. The CRA doesn't call you and say, hey, Mrs. Smith, I think that you made a boo-boo and we owe you more money. They don't do that. Yeah. So it kind of gravitated and it grew and snowballed, and that's how I do like over 800 taxes. I actually wrote a book in 2016 called Why You Need a Financial Advisor. And I wrote that book because I had a client say to me, oh, I read this financial planning book and it was fabulous. And quite honestly, I've never heard a person say that before, because a lot of times people tell me they picked up financial books and they haven't gone through. So, however, I disagree with a lot of the content that this author had written. So I wrote my own book to really just educate people about basic finances. And that was in, like I said, 2016, right before I had my son. So now I'm a mom. I have a 5-year-old. And again, it was just a basic financial planning book. Yeah. But just really over the last year, I've had a few new clients, prospects that came in, and they didn't realize that they were essentially going to work for like a couple $100 a month. I have one lady I can share more story, but I figured out she was going to work for $44 a month. Wow. And it kind of hit me and went, wait a second, this is, after 19 years of being a financial advisor, this is the demographic that I really want to work with and I really enjoy working with. So that's how I decided, okay, I need to write another book. So the first one was just, basics about financial planning. This book is targeted for people that are a few years away from retirement or currently retired and looking for ways to maximize their tax credits and just get more information about how to properly construct a financial plan.
Just going off of the person that you were using there that was basically making dollars, how do you make sure that's not you? How do I know that's not myself working here with you today?
Yeah, great question. So I typically see that happen, and this isn't everybody, but just as a real general statement, this particular person that I'm talking about had a pension through an employer and, was turning 65, eligible for full Canada pension, full old age security. And when you look when somebody's working somewhere and they pay into a pension plan off of their paycheck each week, they have unemployment that they're paying into Canada pension, union dues. You start seeing all of these deductions. And when I look to say, okay, what are you actually taking home right now working versus, let's fast forward, I do a mock tax return to show them, okay, if you were retired, this is what your company pension is going to pay you, plus Canada pension, plus old age. Mm-hmm. And then I lay out all of the deductions. So this particular person would get the basic limit. So every Canadian listening to this right now in the year 2022, you can make $14,398 before you pay a penny of tax.
Okay.
But a bonus when you get something called the age amount. So you can also get almost another $8,000 deduction just because you're 65. Then there's a $2,000 pension credit. So in a lot of cases, depending on what your total income is, most Canadians 65 or older can make about $25,000 before they pay a penny of tax.
Wow.
So when you lay this out and articulate it, that, and what this person needs to take home versus to run their household with their government pensions and their work pension versus all of those deductions that really eat away at your paycheck each week. And when I ran the numbers and showed this lady $44 a month, it was like, oh my God, her face. If I would have known some kind of direction, so she definitely decided to make the decision to retire.
It's unbelievable.
Well, and I mean, if you think about it, if she's traveling 15 minutes to work and she's putting gas in her car, it was costing this woman to go to work.
Great point. Yeah.
Yeah.
Boy, it's scary. And again, I have, a work pension and everything like that. And that's why I was just kind of wondering, how do you make sure this is not myself today, working in this workplace? Let's talk about the book, Retire on Purpose. I want to get into that title, but first, what will we learn when we're reading the book?
So I laid it out in a few different chapters. So the first thing is, my first chapter is called Review Your Foundation. So it's really understanding, how much are you eligible for Canada pension? I'll have people come into my office. They have no idea how much they're eligible for Canada pension.
Yeah.
Depending on if someone was born and raised in Canada, then they would get the full amount for old age security. If someone, maybe moved to Canada in their 30s or 40s, then we need to calculate, okay, what would their old age security amount be? We look at that. Then we also look at, does this person have a defined benefit plan? So, for example, if you worked somewhere like the city of Windsor where you get an owner's pension, that would be a defined benefit plan. Or does somebody have a defined contribution plan, which means you put money in, your employer matches it, but it depends on how your funds perform, and that's what your funds are going to look like upon retirement. Mm-hmm. We look at all of that. Have you put into your own RSPs, tax-free savings, really to get an idea of what are you working with to start with in terms of a predictable income stream, and then what do we need your investments to look like? Everyone's situation is unique.
Yeah.
I actually got a phone call a couple of weeks ago from a gentleman, and he said, one of my friends is your client, and, she said she's taking Canada pension and she's 60, and my financial advisor at the bank told me that I shouldn't take it yet. How come?
Yep.
Well, time out. Everyone's situation is completely different. Depending on what your marital status is, how much you have in terms of investments, do you still have a mortgage? Health comes into play. There are so many different factors. So that's why we look at everyone, on a case-by-case basis and help to make the most educated decision.
Let's talk about that title here, Retire on Purpose. Like for me, and again, this is where I know when I talk to somebody like yourself, I am not prepared. Now I'm only 37, but still, it's something I think about every day, to be honest with you. Retire on purpose. I'm just hoping, I make it to 65 and I'm able to just, peace out, see ya, and hopefully everything works out for me, right? Probably not going to work that way as I go on here with my life. So what does that title mean? How do we have a purpose to retire?
Well, I guess the key is, do you even need to work till 65? Some people, are just think that, okay, 65 is the age that, this is when some government benefits are going to kick in.
Yeah.
But first, maybe you don't even need to retire at 65. Perhaps, somewhere around 60 might work for you. It depends, right? Obviously, it depends.
I would love that. I would love that, Ellen. I would love that.
Yeah. And the other thing is when, I see a lot of times people just save amassed a lot of money in RSPs and tax-free savings and other investments, but they don't have a plan. They don't have any goals. Just like, okay, our parents just taught us throw a bunch of money in RSPs and just keep doing that, and hopefully you'll have enough when you retire. The key is, first we look at your foundation, then we look at, okay, what do we need to cover off your basic needs, right? Keep a roof over your head, make sure you have food on the table. But then what is all of the extra money? What are you going to do with it? Do you want to travel? Do you want to spoil grandkids? Do you want to spend 3 or 4 days a week on a golf course?
Yeah.
Do you want to spend, 6 weeks in Florida or 6 months in Florida? So really having a plan. And then I keep in touch with clients on a regular basis, because I find that we don't celebrate the small wins that we have. So, paying off a mortgage or paying off a vehicle, or, I got to take my family to Disney and that was a great trip. So working with clients to integrate all of their goals into their plan.
Oh, and I want all of that. All of that is what I want. I want to retire on a golf course. I want to travel. I want to spoil, my niece and nephews. I want all of that. So I see what you're getting with a purpose. Because to me, again, 65 and hopefully the money is there. But if I don't have a plan, I'm guessing the money is not going to be there, right?
Or you're at the mercy of hoping that, you've got enough money in Canada's pension and old age security.
Yeah.
That, you might be sitting around $20,000 to $25,000 a year, today's dollars, to live on. Is that going to be sufficient in the future? So probably a good idea to have a plan.
I also have a question about selling the house. Hopefully by that time the mortgage is paid off. And what do you do in that situation? Like, I have a financial advisor. Hopefully it all works out for me, as I get to 65, or like you said, maybe earlier. But also what to do with the mortgage. If it's paid off, what do I do with that house as well?
Yeah, I guess it depends too. And I get asked this question quite frequently. And I think sometimes people have the vision of, okay, I'm going to sell my house. I'm going to move to a townhouse or a condo. But I also caution people to make sure you really do your homework and you know what the expenses are like.
Yeah.
I have a client that, said, okay, I'm going to downsize from, a raised ranch because shoveling snow and cutting the grass got to be a lot. But this person moved into a condo, and the condo fee started at like $300 and change a month.
Yeah.
Now they're almost $500 a month. And this person's also paying property taxes.
Yep.
So you're still like $700-800 a month in terms of these regular fees that you're paying. Whereas if this person stayed in their house and maybe, paid a kid on the block, I don't know what kids even charge for shoveling snow anymore. I don't know, 20 or 40 bucks or whatever it is.
Probably,
and,
yeah.
Ask the neighbor, was a very big lawn. Hey, can I throw you 20 bucks each week when you cut the grass?
Yeah.
I think this person would have been better off staying in their home. But everyone's situation is unique. So I think, if you're living in a five-bedroom home and, you need to move into a home where there aren't a lot of stairs or whatever, that's maybe a different situation. But that's when we actually sit down with clients and say, okay, we're going to do a cash flow plan and see what is it currently costing you to run your household. If you did downsize, what does that look like? Does it make sense or not? So really running the numbers, and I'm a very visual person, so I like to lay it out for people to look and see. So it's so hard to say. Who knows? I mean, obviously nobody saw this crazy real estate boom that we had the last few years, and things have slowed down a bit. So I don't know if necessarily banking on the equity in your house is always the best financial plan. I mean, sure, there is money there. But I've had people inquire about, do they do reverse mortgages? In some cases, that makes sense for people. In some cases, there's a lot of fees and charges. So I'm more inclined to say try and beef up as much as you can in your tax-free savings and other investment vehicles. And then the equity that you have in your house is sort of gravy. It's that extra.
Yeah, and again, that's why it's so important to talk with you. Alynn Godfroy, again, you can get a hold of her, 519-258-1995. GodfroyFinancialGroup.com is a way to go online. And you'll also be out and about in the community. We got the Boutimere Library on April 20th. And just coming up here, Riverside Library on April 17th. You got free sessions over there. What will we find out? And again, we can talk to you and pick your brain about subjects that we're talking throughout the hour here on Experts on Call as well, right?
Yeah, definitely. I'm excited about both library appearances, but I grew up in Riverside, so I actually was at the library every week taking out books, so I'm excited to go do a presentation at that library. And do you want me to kind of give an outline of what I'll be talking about?
Absolutely, please.
At the library presentation?
Yeah.
Okay. So there's three key points that we're going to talk about. One of them is decumulating your assets early on in retirement. If I can, I just want to share a quick story with you.
Absolutely.
I had a family come to me, and unfortunately, the mom had retired at 60, and unfortunately, when she was 64, she passed away. She had some health issues, but it was pretty unexpected when this lady died. And the problem with the situation is this lady died in October, and it sounds awful, but the later in a year somebody dies, the more of a tax problem it can become.
Oh, wow.
And this woman had worked for the city of Windsor, so she had an OMERS pension that paid out for 10 months, and she had started to collect Canada pension. This lady was divorced and had 2 kids in their 30s. The problem, though, is this woman had over $200,000 in RRSP. So had she been married, that money could have rolled tax-free to a spouse. However, she was divorced. So what happens is the government deems you to have cashed in that money on the day that you died.
Okay.
So over $200,000 in RSPs, 40-some-odd thousand from OMERS plus her Canada pension. This woman was in the highest tax bracket.
Wow.
And the highest marginal tax bracket in Canada is 53.53%. So once your total income's over $220,000.
Wow.
So unfortunately, I had to deliver some pretty upsetting news to her kids that they had to write a check for over $100,000 to the government to pay her tax bill.
Oof.
So I like to educate people. So in this woman's case, unfortunately, I didn't meet her when she was 60 and had decided to retire and said, okay, let's have a plan and have you start getting money out of the RSPs. So I work with people to help set up a plan so that when they've retired, they're not leaving this tax liability to grow and accumulate to age 71 when you have to start taking money out.
Mm-hmm.
So I'm going to talk, the first point is talking about decumulating your assets early on in retirement. And then the second point we're going to talk about is the benefits of pension income splitting.
Okay.
So when people are listening to this, it's tax season.
Yes.
So a little tip for people, if you're looking at your tax return, if you or your spouse or common law spouse is retired, take a look at line 31400 of your tax return, and that's pension splitting. If either of you is retired, you should each have $2,000 entered on that line 31400. What a lot of people don't realize is that even if one spouse is working, you can still share $2,000 of your pension with them so that your spouse gets that $2,000 pension deduction.
Oh, wow.
So it's a way to essentially get $4,000 out of your pension without having to pay any tax on that money. So I'm going to share a few examples of that. And then the third thing that we're going to talk about is the advantage of sharing your Canada pension credit. So 3 things that they're sort of the 3 biggest things that jump out to me when, someone hasn't done planning or they haven't necessarily gotten the proper advice in the past. So these are the 3 things that I'm going to be talking about at the library presentations in more depth.
I have to say congratulations also. Windsor Community Votes 2022 Platinum winner voted Best Financial Advisor. So, you're getting advice from the best in Windsor. So congratulations on that. That must have been very exciting and just an honor to receive.
Thank you. Yeah, I have some amazing clients that voted for me, so I really appreciate it.
Yeah.
And I love what I do. When I wake up and I don't feel like I'm going to work, I'm excited to. No 2 days are the same, so I absolutely love what I do. And people ask me when I'm going to retire. I have no idea. Probably when I'm 75. I don't know. I have a retirement plan, but it doesn't feel like work. I truly enjoy going to work every day.
Yeah, that's amazing. Again, GodfroyFinancialGroup.com is a way to get a hold of the best in Windsor. 519-258-1995. So much more with Alynn Godfroy coming up next here on Experts on Call with Kyle Horner on AM800.
Pen in the junk drawer to write down info from our Experts on Call guest. Listen to the show again. Find the podcast under the audio section of our website, AM800CKLW.com.
Well, good afternoon and welcome back to Experts on Call. My name is Kyle Horner, and we're just having a great hour talking about finances and retirement, something so important, something we have to talk about. Alynn Godfroy is with me. To get a hold of her, GodfroyFinancialGroup.com is the way to go online. 519-258-1995 on the phone lines. Community voted, Windsor voted, 2022 Platinum winner for Best Financial Advisor. We literally have the best here on Experts on Call today. Check out her book, Retire on Purpose, a financial blueprint to protect your family and preserve your wealth. So important. And pick her brain. Go out to some free sessions. One is at Riverside Library on April 17th, and the other one, Budimir Library, on April 20th. Again, go out there and just find out some great info on how to plan for retirement. Alynn, let's get into retirement here. When you get a new client, somebody that has no idea what they're doing about retirement, no idea where to start, what do you say to them?
The biggest part is, what are your goals, right? What do you envision your retirement to look like?
Okay.
So that's the biggest key. And then the other thing is, I find there are so many Canadians that have no idea how much it costs to run their household. They have money coming in, money going out, but there's not really any thought to, how much am I going to need run my household now while I'm working, and what does that look like in retirement? So I do a current budget, and then we do a post-retirement budget to look and see, okay, what things are going to change. For the most part, most people are still going to have the same expenses. However, your gas usage might be down a little bit. If you have to dress up nice for work, your wardrobe expenses may change a little bit. Or if you're commuting to the States, your, bridge tolls might decrease. But we really want to get a handle of how much do you need to cover off your basic needs. And then from there, what are all of the extra things that you want to do? And then we have this lovely little thing called inflation that's reared its ugly head in the last couple of years that we need to contend with.
Yeah.
So doing some projections to say, okay, we know that, the price of gas has gone up, and groceries, just running your household in general. How do we factor that into your plan? And then, unfortunately, some people end up becoming ill and they require long-term care, or maybe they need somebody to come into their household to help care for them or do some duties around their house so that they can continue to live in their house. Taking that holistic approach and looking at all of that to make sure that we can construct a plan for them.
It could be very daunting and overwhelming, right? And when you first kind of lay out a plan, like you were saying with clients, and, they tell you, I want to travel, I want to do this, I want to do that. And then you look at their bank account or what they have saved, and it's nowhere near what we need to get to that point. How do you help them out there? How do you kind of set them on a path to get there? Well,
then we have the discussion about, what's more important. Because I see people that, they eat out 4 or 5 times a week, which, it's fine if you have the affordability. But if you don't, you sometimes have to make some sort of compromise to say, okay, you know what, maybe I'll make a couple more meals at home. We'll be able to tuck aside a little bit more money so that when we retire, we can, stay in a little bit nicer resort when we go on vacation each year, or whatever the case may be. So when we look at the numbers, or we look and say, okay, you definitely need to be more strategic, more intentional with your budget on a monthly basis.
And like you said, with everything going on in the world right now, it just makes it so much tougher, right?
For sure. But that's why when you have a financial professional that, their job is to have a pulse on the markets, to, keep up with the daily news, then you can go to work and focus on what it is that you're doing to make an income, and then go to a financial professional to be able to have them help you with that.
And again, that's why you go to Alynn Godfroy. Again, voted number one with Community Votes Windsor 2022. GodfroyFinancialGroup.com. Again, the way to go online, 519-258-1995. Does this mean we should be looking at it at a much younger age? Again, I'm 37. I wish, obviously, in my early 20s, I would have started planning it out a lot more. Something on my mind now as I get older. Should we be looking at this at a much earlier age?
Definitely, if you want to make your dreams a reality. That's the one thing. The other thing is working with someone that is a retirement specialist. So, for example, if you go to your family doctor and your family doctor says, oh, Kyle, I'm a little concerned about your heart, you could continue to go to your family doctor for the issues with your heart, or you might feel a little bit better going to a cardiologist where they just specialize in that one area, which is the heart. So working, there's a number of financial advisors in the Windsor area. The key is a person that you're working with. They may have helped you to amass this wealth and you're at the point where you're ready to retire, but is that same advisor the expert to work with you to help you decumulate your assets and really help you do the proper planning when you're going to be retired? Yeah,
smart. As we look into your book here, Retire on Purpose, you have a 6-part pathway to retirement, right? Can you break that down a little for us?
Definitely. So we talked a little bit about the first one, which is review your foundation. So knowing what your Canada pension, old age amounts will be and your other investments. The second chapter is envisioning your future. So knowing what your goals are, what your basic expenses are going to be, and then what do you do with all the extra, the fun stuff. My third chapter is called Trim Your Taxes. So talking about things like pension splitting, sharing Canada pension credits. There's something called the disability tax credit. So if you have some sort of, ailment or health condition, there is an extra tax credit you may be eligible for. And then I talk about just ways to minimize the amount of tax that you pay with some different strategies. It's a very high-level overview, just to give the readers some more general knowledge. And then we talk about insulating your income, so ensuring that you have proper life insurance coverage and ensuring that you have the proper beneficiaries in place. And then reinforcing your wealth, so there are different ways that you can keep more of your hard-earned dollars in your pocket. And any money that you don't spend while you're living, making sure that it goes to your kids or grandkids or charity. Most people like to leave their money to those individuals rather than the Canada Revenue Agency. So making sure that people know ways that they can keep more of their hard-earned money in their pocket. And then establishing a legacy. So, what do you want to be known for? Do you want to have a hospital wing named after you? Do you want to have a park bench at your favorite park with your name on it? Or do you want to help your grandkids pay for a wedding or a university education? Or do you want to just make sure that your family unit stays intact when you're not here one day? Because unfortunately, we see a lot of situations where siblings squabble because, they don't like how one of the, siblings handled mom or dad's affairs when they passed away. So just making sure that we take a holistic approach so that everything that you've worked hard for, most of that goes to your family versus unnecessarily going to the government in the form of taxes or additional fees.
Yeah. Do you find when you break it down in these steps that it's much easier for somebody to comprehend?
Definitely. And my book's just over 100 pages, and there's some references and resources where, we have an intake form that I actually give to people before they come in to meet with me so they can look and say, and I tell people, I'm a no judgment zone. So, whether, you go to Tim Hortons 3 times a day or you like to spend money on bingo or you eat out 5 nights a week, we need to just get an idea of what you're currently spending money on so we can look and say, okay, is that something that you can continue to do when you're retired, or are there some spots where you can maybe cut down on things so that you can retire a little bit sooner or ensure you're going on that family vacation each year or whatever your goal may be?
How important is it to talk to somebody like yourself, right? How important is it to have some help? Because like we've gone through, whether it's just taxes alone on how much we could be throwing away or missing without your help. We really do need somebody that's in this field, especially retirement like yourself, that can really help us out.
Yeah, I think the key is just, when people come to see me, everything we talk about is completely confidential. And I've seen situations where, people have been bankrupt a couple of times and they're rebuilding. I also have clients that are multimillionaires. my job is to just look and say, okay, what is the problem that, like a doctor, what are we trying to diagnose? Are we trying to figure out how you can just cover your basic expenses? Are we trying to make sure that you can retire a little bit sooner because you have a super stressful job? What is it that we need to work on for you? And again, when people come to see me, my job is to really help and not to make any, everyone's made, financial mistakes in the past that, they want to kick themselves for, but it's not going to help and not be productive going forward. So the key is to say, okay, what kind of issues do you have? Let's address them and come up with a plan, and then just keep in touch regularly and work towards that plan.
And again, that's why you need to reach out to Alynn Godfroy, GodfroyFinancialGroup.com. Go check out the website. Again, you can check out her books there, Retire on Purpose, again, a financial blueprint to protect your family and preserve your wealth. You can just find out more info about herself and how she can help you out. Also, the phone number, 519-258-1995. So much more info on retirement with Alynn Godfroy and Kyle Horner on Experts on Call on AM800.
They've earned the title of expert, and they're on call for you. 519-792-2559 or pound 800 on your Bell Mobility phone. Experts on Call is an advertising feature on AM800.
Welcome back to Experts on Call. My name is Kyle Horner, and just a great hour talking about finances, retirement, so important. Alynn Godfroy is with me. GodfroyFinancialGroup.com is the way to get a hold of her online. 519-258-1995. Go out and see her. Riverside Library, April 17th, and the Bootermere Library on April 20th. She'll be breaking it all down with retirement, finances, taxes, tricks on how to get money back with our taxes, and maybe what we're missing out. And it's all free. Free sessions over there. Again, April 17th at the Riverside Library and the Bootermere Library on April 20th. 14% of people, I guess, retiring only have a written plan. Talk about how important that is.
Well, I think the key is to have a plan so that you can gauge from year to year, are you getting closer to that goal? So if you don't have a benchmark from where you're starting at, and, some people can just do, a basic statement of net worth and see that they're, just increasing the amount that they have in investments each year and paying down debt. Yeah. But there are so many more facets to that as well, too. So I think it's really important to have a plan. And if you're having somebody manage your investment portfolio, they should be doing a plan. Yep. How do they know if you should be in a balanced portfolio, or having a lot of equity within your portfolio if they don't even know what you're working towards either? So it's kind of hard to just say, I don't say to clients, here's an investment portfolio and see you next year. We want to look at having a plan so that people are putting away money on a regular basis and in the appropriate types of investments based on their situation. So it's disheartening that only 14% of people actually retire with a written plan.
Yeah. But again, it doesn't surprise me because I've never wrote anything down. My wife, way better at this than I am. And I don't even think she's written anything down, right? Again, I think we just kind of have our own plans in our head. And we should probably talk about our plans as well, as I'm hoping to, kind of like what we talked about on a golf course in Florida somewhere. That's hopefully where my retirement is. I don't even know where her retirement plans are, right? So maybe we should talk to our partners about that as well. Kind of piggybacking on that, what are some of the big mistakes that we make either planning for retirement or going into retirement that you see when talking with clients or whoever?
Well, just something that the onus should be on your advisor. Your advisor, the person who's managing your investment, should say, hey, Kyle, we need, you and your wife to come in. Let's work towards a plan. Okay. So, I don't kick yourself for that. That's you're paying a fee to have your money managed. That person is a fiduciary, meaning they're supposed to have your best interest in mind. And part of that is ensuring that you have a proper plan in place.
Yeah.
So don't beat yourself up. So that the onus is on your financial professional.
That's a great point. Yeah.
Mistakes retirees make. One of them I see a lot is not having a plan to properly decumulate their assets. So, people just put gobs of money in RSPs, or they might have a registered pension plan through their work, and they really don't understand how to get money out, and they don't have a plan. Okay. That's probably the biggest one, because if you just leave this money grow and accumulate, you just create a bigger tax liability down the line. potentially affecting your old age security that you're eligible for at age 65, or if you don't get the money out, leaving a big tax bill to your estate.
What about taxes? As like you said, we are in tax season right now. I have a person I've been going to for years. Is she asking me the right questions? What questions should she be asking?
I mean, the biggest things, each year is donations. So making sure any donations you make, put them all on one spouse. And it doesn't matter which spouse. There's no benefit to giving the donations to one spouse or the other because it's a credit. Medical expenses. So if you have any, prescription, dental, chiropractor, that's one that should go on the lower income earning spouse. Something that's new for this year is the staycation credit. So if you stayed in a hotel, Airbnb, cottage, did any camping, that's a credit. So if you're an individual, you claim up to $1,000 and it's a 20% credit. So basically if you spend $1,000 in hotels, you'll get $200 of that back on your tax return. And then for a family, it's $2,000. So the maximum you would get back at the 20% is $400. Those are the three big ones in general on people's tax returns. If, like I said earlier in the interview, if you have someone in your household that's currently getting a pension, looking to see that both spouses are getting the pension credit, so just sharing $2,000 of your pension, even if your spouse is working, is a way that you can save on paying tax on $2,000. The disability tax credit, if you have any sort of health condition, that may be a consideration as well. So those are the big ones. Working from home, that's still one that the government recognizes. If you're working from home all of the time, then you can claim up to 250 working days. And it's a flat $2 a day, so it's essentially a $500 deduction that you can get on your tax return.
There's a lot. And again, this could be money that you're missing that could be in your pocket, in your bank account right now. If your advisor is not asking you these questions, you're missing out right now. Again, you're missing out on money, and that's why you got to contact Alynn Godfroy. Again, 519-258-1995. She doesn't miss these finances, and again, it could be money in your wallet right now. GodfroyFinancialGroup.com, again, online, 519-258-1995. We'll wrap it up next year on Experts on Call with Kyle Horner on AM800.
Some home repair jobs are DIY, but most are left to the experts. This is Experts on Call, an advertising feature on AM800.
Welcome back to Experts on Call. Kyle Horner with you again this hour, talking about retirement finances. Alynn Godfroy is with me. 519-258-1995. GodfroyFinancialGroup.com is the way to go. Just before that break there, we were talking about reaching out to you, right, and making sure we're not missing out on our taxes. How many do you do?
At our office, we do somewhere around 800 tax returns a year.
So, I mean, this is what you do, right? This is how you're able to help people out with taxes and then obviously retirement as well, right?
Yeah, I mean, they go hand in hand. So, if somebody comes to me and they've been dealing with the same tax repair for 20 years and they love them, fantastic. They can keep going to that person, but I ask that they bring their tax return so that I can look and make sure that they're taking advantage of all of the different credits. I had a newer client come in. He actually found me online, this gentleman. He's a cute old man. He's 88, so I thought it was great that he found me from my positive Google reviews. And he brought in his tax return. The problem is he did not have the disability tax credit when I looked at his return. This gentleman walked with a cane, and he had a hearing aid, and he said he'd been walking with a cane for over 10 years. So I sent him the form. He had his doctor sign. Long story short, the government went back 10 years and adjusted 10 years of back taxes to give him the disability tax credit, and he got a nice chunk of change. So he was pretty happy about that. So how the disability tax credit works. So for the year 2022, on the first $14,398 any Canadian makes, there's no tax.
Okay.
But if anyone's, looking at their tax return, it's line 31600, which is the disability tax credit. And basically, you get an additional $8,800 deduction on your tax return by having this credit.
Okay. And again, as we look into retirement, healthcare costs, right? Somebody like myself has to think about that. And I'm sure many of my listeners right now are right at retirement age listening to you, getting some tips on how, you can help them out. But a healthcare cost is going to be a huge issue, especially if we do want to travel or like you said, somebody might have to come into the house. That's all costing money.
Yeah, and I think the key is, depending on your employer, you may have group benefits that will continue to cover some of these items while you're still working or when you're retired.
Gotcha.
But the key is, if you don't have those benefits, then looking at how do you get travel insurance. You don't want to be outside of Ontario and have some sort of major health event where the Ontario government says, sorry, we're not paying, and you don't have any travel coverage. That could be very problematic and really derail your plan. And
really derail trips or adventures that you'd like to go on.
Well, and not just that, making sure that if you don't have travel coverage through an employer, making sure that you buy your own, because, COVID stopped a lot of people from crossing the border. So, going to pick somebody up at an airport or just run into a Tigers game for the day, not thinking about it, but if something happens and you haven't paid for travel insurance for the year, that could cause you an issue as well, too.
I wish you could be here for another hour. I still have so many questions that I wish we could get through. We are out of time, though. As we wrap up, though, what is one last thing that you would like to leave with listeners?
I think the key is, I've gone to a lot of, seminars and listened to a lot of different, business people. If you're listening to this and there's something that has resonated with you, do something within the next 24 to 48 hours to take action. So if you're sitting here listening thinking, God, I have no idea how much it costs to run our household, or, you know what, I really have no idea when I'm going to retire, then do something to take action so that, the last however half hour, 45 minutes that you've been listening hasn't been a waste. Get in touch with our office if you need help or a second opinion, or if you have a financial professional that you are dealing with and you have a great relationship, but you don't have a written plan, reach out to them and say, can I have a written plan? Because, I don't want to work forever. So I think the key is just do something to take action and move yourself forward.
And again, just one more time, I'll bring up your free sessions, which is very cool for you to do at Riverside Library on April 17th, Bootemere Library on April 20th. One more time, just what you'll be discussing at those sessions.
So talking about how to decumulate your investment assets, the benefits of sharing your Canada pension credits, and how to split your pension with your spouse.
And of course, her book, Retire on Purpose, a financial blueprint to protect your family and preserve your wealth. Best-selling author, financial expert. I mean, this is who you got to talk to. Again, GodfroyFinancialGroup.com online, 519-258-1995. Alynn Godfroy, it's been a pleasure. Please come back, because I still have probably an hour of questions that I can ask you, okay?
For sure.
All right.
Thanks for having me. I appreciate it.
Absolutely. Again, this has been Experts on Call with Kyle Horner on AM800.
That's all for this session of Experts on Call, an advertising feature on AM800.
Did you miss something?
Go to AM800 CKLW.com and listen to this broadcast again under the Experts on Call section of our website.